Hi, welcome back. For the market, it's just about flat actually, so we're tightly ranged, and it's the Nifty Bank which is underperforming, so down about 0.5% over there. And even on an index level, it's the banking stocks which are actually the big drag today. So let's find out what the plays in the banking space. Aalok Shah, the banking and financial services analyst from Central Broking, now joins in from the sidelines of their annual conference. Hi Aalok, good afternoon to you. First up, let's talk about the earnings which have just gone by. What's your own assessment of how your top picks stack up?
Sure. Hi. Well, clearly looking at the banking space, Q4 has been a mixed bag, with private banks continuing to report strong growth on profitability and balance sheet front. From the PSU space, barring SBI, we have seen the disconnect continue, with PSU banks reporting weak growth. This, in addition to asset quality headwinds and weak capital positions, we believe will see PSU banking space underperform. Structurally, we believe that private banking space will gain market share over PSUs in coming period. On the coverage part, we remain selective and play the franchises that generate strong operating profit, have healthy capital positions, and provide a greater degree of comfort on asset quality. From a coverage space, we like State Bank of India and ICICI Bank in the large cap banking space. We also remain positive on the mid cap private banking space, a key area of focus, and we like the regional players like City Union Bank, Lakshmi Vilas Bank, DCB Bank, and Karnataka Bank.
Okay. Aalok, can you just tell us your rationale for State Bank of India, and how did you read the numbers gone by for the quarter? Because standalone the numbers were fine, but if you look at it on a consolidated entity, which is what is going to be considered as going forward, it disappointed.
Well, I take your point. On a consolidated basis, especially the associate banks had losses for Q4 quarter. But if I was to look at the merged entity in terms of their market share, in terms of capital position, in terms of their ability to absorb asset quality risk, for a simple fact that associate banks are merged with the parent bank with NPAs already on board. So as I look at SBI on a consolidated basis and into FY18, we see this as we see this franchisee emerge as a much faster and a bigger one, and clearly we expect SBI to continue its trajectory on gaining market share. Purely from valuations, we have seen valuations for SBI on a consolidated basis remain far more supportive. We thus have a buy rating on SBI with a target price which is close to 320 rupees.
Okay, Aalok, what about the NBFC space then? I mean, I understand that, post demonetization, they have shown quite a good bounce back actually, but you think there's still a lot more headroom given the kind of attention that they've received over the last few months already? But is there still more headroom for from a stock perspective?
Yeah, well, clearly NBFC space, as you rightly pointed, have come a long way post demonetization, especially select asset financing companies and housing financing companies. From the names that we cover, we specifically like Sundaram Finance for the market leadership position that they have in the areas of operations. Similarly, on the housing finance space, we have GIC Housing Finance that operates out of niche areas of presence. Answering your question on growth and post demonetization, we expect the trajectory for these NBFCs to continue. We also cover the MFI space and the space that we look very closely into. The recent past has seen some kind of moderation, especially with concerns on collection efficiency. However, we believe that as the inherent strengths of the business model, existence of credit bureaus, the stringent regulatory framework, and more importantly, the move towards digital way of doing business, we'll see this MFI space emerge as a stronger entity in periods to come. Okay. We like Satin Credit Care in the MFI space for the sequential improvement in the collection efficiency that we have seen, and we have a buy on Satin here.
Why do you have a sell on M&M Finance, and what would make you incrementally positive on the stock?
Well, for M&M Finance, we've looked at multiple factors, including the recovery trends that could come through in FY18-19, and more importantly from the ROEs that could eventually flow down into those periods. Having said, when I look at my ROEs for FY19 and the valuation bands that they have the stocks traded into, we firmly believe that the stock is trading at a premium even to its historical valuation multiples and to the ROEs that could come through by FY19, and hence a sell on Mahindra Finance.
All right, Aalok, thanks very much for your time this afternoon and also for taking us through that quick snapshot of the banking and financial space. A quick break.